I mean, you can do this. Everyone can do this. You gotta be super disciplined though. I'm not kidding. You gotta be disciplined. I'm not fooling around when I say that. You gotta be patient and disciplined. You have to put the time in too.
Welcome back everyone to News and Now with John Kurisko. Look forward to talk about trading, his style of trading, a bunch of things. It's always good to talk with him, always good discussions. So John, welcome back on the podcast. Good to have you here again.
Oh, it's great to be here, Etienne. Looking forward to it. And always great results from your podcast. There's so many traders out there that I make contact with them when we go on, and it's just it all started with you. So I really appreciate when you have me on the air or on your podcast. So I'm glad to be back. And we were just talking before. And I was talking to you now. I know we're going to do this, but I'm so passionate about trading. And each time I think I come on your show, I end up gravitating to the same thing. What the style of the setup that I look for in the markets. Because when it comes down to why we're in the market, why are we all in the markets, is to make money, right? And most of us want to kind of have the dream. If you're a trader, if you're a young trader, maybe that's you, Etienne, who funds his way around the world and he lives in different countries and stuff and trades from different countries. I had that similar experience in the 90s. In the 90s when I went to Europe with my laptop and I would trade from the internet cafes and stuff, and that was really old school, but that was so much fun. So, and then you have people who want to invest in stuff. But what I found out over the years of me trading, it came down to a simple setup that I look for in the market. Years, I've been in the market since 1996. I started the show in 2007. 1996 to 2000, the tech bubble. You can't give you any credit if you made any money back then. It was easy to make money. You will go to sleep holding, something, and you'll be, 10 times the amount the next morning. But that was kind of a fluke. And then, you learn the ropes throughout the next, 20 years. And it comes down to the simplest things sometimes. So, when that bell clicks and you say, wow, that big, long learning how to lose money. Every way that we learn how to lose money is one less, way we're going to lose money. You're going to learn that fast. And what I learned over the time is, I could get rid of most of the stuff. I want the things that work most of the time. Nothing's perfect. There's always news and stuff, but there's science, there's logic, there's math behind the markets. The markets are now controlled by algorithms, black boxes, computerized, high-frequency trading, and it's very difficult.
I love it. You're one of the genuine guys who really day trades like every single day, and you put it like everything out there to put and see what you're doing, and it's pretty cool. Tell me a bit more about kind of what's been going on since we last spoke. I think it's been a year ago or something, but maybe more. Has anything changed in the way you trade, or is it still the same?
Yeah, no, absolutely. I mean, I was like, wow, I want to get back in the podcast. There's a couple big things that I've really kind of focused in on and started teaching more aggressively because they've been, and really taking time to measure the results and make sure everything works perfectly in a method that, when we trade, I'm a chartist. I'm a technical charter, and I like momentum. And one of the greatest momentum traders, or at least someone who developed one of the greatest momentum indicators, was George Lane, who invented the stochastic oscillator. And when I learned about the stochastic oscillator and how it worked and the history behind it, I fell in love with it, and I really understood it. I understood, I have a book here. I probably showed this. Let me see if I can grab it over here without breaking myself. This book right here. Look how old this stuff is. This is George Lane's book, right? This is like really, really, really cool old school stuff from the typewriter and stuff. That was passed down to me from one of his students, which I thought it was like the Holy Grail. Anyway, the methodology behind the divergences and how momentum. I could even show you a graph here if you want me to. All right, so we're talking about George Lane and his stochastic oscillator, and I just wanted to show you the math behind it. It's always super important to understand. You have to be truly confident in trading. If you're not confident, you'll get shaken out of a lot of your positions. Like I said, the market is now overrun. Like I don't know what the exact figure is, but they say it's close to 70% algorithms in high frequency trading moving the market volume, right? So it's very hard to, and they imagine what these programs kind of could do and what they could search out. And you wonder if they could see your orders on in the system. They know exactly where to come. I trade the markets every day live on the show. And I see it, after a while, after years and years of looking at it, you see certain levels. And, I want to actually show you the thing on the stochastics here, though. The stochastic oscillator here measures momentum. It measures momentum, and just a fast lesson on stochastics. It's broken down into two lines, a K line and a D line. The K line represents how many periods you're looking back. So if it's like a 9-3, it would be 9 periods. So it could be 9 1-minute charts, 1 minute candles, 9 5-minute candles, 9 daily candles. And that's a pretty fast, that was the basis default he started with, the 9-3 and a 14-3. And the D line, which is called the signal line, is a kind of a moving average that's placed on the first one to slow it down and round it off and not make it so jaggy and, choppy. But as he called it a signal line for a reason. So we really I use the signal line and I don't do any divergence crossovers or anything. And the divergence signal combined with a couple other indicators that I started using different time frames just worked. And what this is measuring, and a lot of people don't really even realize that stochastics are such a great indicator because they're a proactive indicator. They are measuring momentum, and when momentum dies out, the price continues to move, even though the momentum dies out. Because it says great example is a rocket and the fuel in a rocket, and the rocket's going up with the fuel, and all of a sudden the fuel dies, but the rocket's going to continue to go higher before finally rolling over. So that's exactly what happens with a stochastic, stochastics and divergences. We are starting to see that rollover internally. Now the key is it's internal because we're taking the average. It's actually how the formula works. It's actually looking back and comparing each of the candles to the previous candle on a range from 0 to 100, and it puts that on a line. So then you'll know if you're at the bottom of the range or at the top of the range, 0 or 100 or something. And when you start to see the divergence, and again, I'm not going to go too much into this, but that is telling us that the momentum has shifted, but the price is still going down. And the divergence between the stochastics and the price is that that's what we're picking up on. And that works 85-90% of the time if you add a couple indicators to that. It's just amazing. So, when we talk about what has changed over the last year, just understanding the markets more. I mean, today I'm always trading. I'm trading right now. I'll bring over the chart here. All right, that's actually the market right now. All right, the market's going on right now. And this is today's market. This is me today. When I'm broadcasting during the day, I'm trading the futures. We have opportunities in futures, when we have divergences. Now, I'm not going to go into any other, I'm not going to go into too much detail here. But during the day, what I do is I call the markets on my radio show. And, and I'm looking for one of 3 setups. And I call those super signals. Now, I know my divergence is one of the best signals out there. It's when you have that low and a higher low and a low and a lower low. This is on a 1-minute time frame. So we know the calculation out of that. A rotation out of a divergence takes 5 to 7 candles to make its completion before we probably start getting into some weakness. So it's very easy to time. It's easy to see the divergence. It's easy to get out of the divergence. And that's what you want to do. So we're scalpers here. We're scalpers. And that's a high probability trade. And that's what we're going to take. And we're not going to take anything other than when we start to see that again. And here we have another big divergence. And you can see a nice move up. Now this... You said Zello here alerts. Remember I was talking to you before, Etienne, about, making sure people understand how great this setup is. I develop an alert system that goes on people's phones. So when this setup comes around, I push my button, and all those phones that everyone's connected to, I actually talk into it, and it'll say, it'll put the alert out. It'll say there's a divergence here. Price is, 50.49. You put a stop at this level, and these are going to work out. These are the most important things that I want to trade, and that's the key. That's the key to success in trading. If you find something that works, as a guy told me the other day, he says, "I'm not going to try to reinvent the wheel. You got something. That's why I'm coming back." I just had a session with one of our members, and he came. He went on his own. He was with me probably in 2008. He said 2008. I was like, and it was great talking to him. We talked for about 2 hours, and he goes, "John," he goes, "I always watched you. I always respected you." And he was from the South. He had this real thick South accent, and he goes, "But I thought I could do better." And I wanted to go do it myself. And I said, "I understand that. Everyone needs to go do that. Everyone needs to find their path in trading. It's very hard to come in and say, 'Oh, I'm going to use this guy's technique.'" I was the same way. I was the exact same way. I did not want to trust someone else's method. I needed to find my own method. And I think a lot of traders, because that's what I do. I talk to traders all the time. So since 2008, since I've been on the air, I've talked to thousands and thousands of traders, and most of them are just, they're always searching for their way of doing it. And that's okay. I mean, after a while, you become kind of zen in the market where you kind of realize there's no fighting. I'm not going to change anybody. I could teach them what's going to work, and eventually they're going to have to realize that really did work, and that was the best. There's nothing better. There is no holy grail, but there is close. And what makes this system, what makes this trade so good is it has a defined stop, all right? A defined stop. It's very easy to recognize, all right? It's extremely successful, and it keeps you the most important thing, it keeps you out of the market most of the time. Because the more you're in the market, the more you're going to lose money. Unless you have a spot in the market that you really understand what's going on. Now, I'm going to give you guys a secret here. I developed these 4 stochastic bands. I didn't develop them, but I put them together in a way that I did some calculations, and they all represent a different time frame. So when I'm watching these stochastics, and it's just the D line, I know what time frame. This is actually the 14. This is the 9-3. I'm going to tell you what they are. 9-3. 14-3, 44, and the 60-10. Now, the 9-3, 14-3 is the great old classic divergence. That's what I use for a 1 minute time frame. And there's a couple type of divergences I use. I use the, and I should switch over the thing so you can see it, right? The most important, that's the key to being successful in the market, is not putting yourself in the market and trying, everyone's going to have their own thing. Like I said, some people might trade Fibonacci. Some people might trade, volume profile. And these are all good. Everything works in its way, When you combine them all, it's magic. When you have a Fibonacci and a quad rotation and a divergence, and that's a super signal, you're definitely, maybe there's a VWAP there. These are the confluence of indicators, and that's what you really want. You want to have the patience for that to happen, because it will happen. Every day there's 3 to 5 setups that I look for and send them out, and all of them, 90% of them will work. And the ones that don't work, we probably know that they're not going to work because there's indicators that tell us, all right, there's more weakness in the market because we're watching our 60-10, which represents our 5 minute time frame. A lot of people, like I said, I take pride in, saying that this 60-10 mimics the 5 minute on the SPY. And that's really great for me to know what the SPY is doing at the same time where the 1 minute time frame is. This means the SPY is actually coming off the off the lows and starting to move back up. When you have the 5 minute plus a 1 minute time frame heading in the right direction, you're going to get a bigger than average move than you are. You might, never look at the whole range. Remember, we're trading 1 minute time frame. So we're in this is a high probability zone, and you're going to take profits up against this trend line because that's the high probability exit. It might go higher. It might not. Most likely it won't. There will be times when you get out and it takes off. But this is the $20 bill on the ground. You're going to pick it up. You know, you're not going to pass it looking for a 50. You're always going to pick up that 20. Called the $20. This is such a good trade. You know, even if you're trading, and you guys do prop trading stuff, right? You know, these are great for prop traders because, you know, and I'm sure this works for Forex really well. I don't know if you have any experience with that.
I think people don't understand really the reward to it as it comes with scalping the way you do. And I know you mentioned that taking profits is like a trend line and stuff, but can you go through how you look at taking profits in these trades and the kind of reward to which you get on these trades?
Oh, all right. Yeah, it's a defined thing. Like, this is a good question. Now, I'm just going to kind of go back here for a second. And kind of go, I had to make a checklist. This is I call it my business plan. For me, I'm probably unorganized. I'm not the A-type personality. You can tell, you know, I'm all over the place. But I'm good at what I do, you know, but I'm not very organized. And that's probably a negative for me. So I try to, you know, and maybe I miss trades and stuff. So I had to put everything in a criteria, very tight criteria box for me so I could set of rules that I just stay in line instead of I start going off on a tangent and maybe over trade. So I make sure, so I defined all this stuff. And now that I defined it, one of the definitions of what's my stop criteria? You know, and what's my exit criteria and what's my entry criteria. So all these, for every trade that I take, is already defined. So I'll give you an example now. We'll go back to the chart. I use stochastics for my entries, and I use stochastics for my exits. All right. First of all, I'm only looking for a high-level divergence where this angle and this higher low. All right. There's some little tweaks that I've done to show you, you know, the better success. But there's an angle between this low and this higher low. And then you can see this line here. It gives you kind of, and it's probably about 7 degrees right there. 7 degrees from that. And that's what I want. I want a high level divergence. The steeper the second line, the better it is. It always is. You know, believe me, I've done this a long time. And that steep line is really key on the strength of the divergence. Now, this is a pretty good one, 7 degrees. Anything above 7 degrees, over 10 is really good. Sometimes you might get a degree, you say, well, there's a little higher low there, but it's like 2 degrees. I said, come on, you know, you can't tell if that's really a divergence or not. And the other thing is, it's what we call the closing price divergence, where we take the average of the closing prices. This is, you know, in the closing price candles, you know, it's not always about the extension candle. It's really about the closing price and the average of the thing. You have to actually see that. If you see a divergence relative to where the price is, and it should be that high. Typically, you know, stochastics are going up, market goes up. Stochastics are coming down, market's coming down. Stochastics going up, market's going up. Stochastics coming down, it's coming down, but it came down just equal, and this held up. Normally, it would come down equal, right? So that's the little divergence we're starting to see, change in the momentum. Now, the momentum is shifted now and that. So now we get our entry. That's our entry. Our stop automatically, what we call one tick under stochastic low. There's 2 stages to a stochastic. Stage 1 is the first low. Stage 2 is the second low. Stage 2 is our trigger 2 with a higher low and a turn up on the stochastics. We enter. Your stop goes in 1 tick underneath that previous low that caused the stochastics. Your entries, you have to, for you to be realistic and have some, you know, make some money. You know, you can't be just one shot in this. You got to have trust in this. You know, when you have these setups, this is when you have to put your money on the table. I take your bat off your shoulder, whatever analogy you want to use. And you want to take it off on, of course, there's a couple criterias here. The couple criteria is what above us, you know, what obvious levels above us that might be showing us as a resistance. Now, the first thing was that blue line, which is the 50-period moving average. So, of course, that would be our first target. And also combined with what I call a rotation on the stochastics. So automatically for me, if I'm carrying 5 cars, that's what I typically do, five cars on the MES. I'll take 3 off on the first rotation and leave the other 2 on with a break-even stop. So that's basically just that's called my $20 trade. It's a fast trade, and I'm looking for the runner. Of course, I'll let it run, and I usually follow it up with a moving average right under the 20-period moving average. I'm not planning on staying in these all day. These setups, and sometimes if it's a really good divergence, I'll switch those over and I'll maybe take 3 ES contracts or 9 or 10 MES or 1 ES. I like to get more of the MES, like multiple contracts of the MES, because it's easy. It's like the ES broken into fractions. So you could mess around with 1 ES instead of taking a big hit if the market goes against you. But you're defined here. You're defined on that. And I mean, these were today was really good. I mean, it was a good day. I had a nice call here. This was a nice call.
That looks scary. That looks like buying the bottom, but it's
Yeah, I mean, this is incredible. You can see the divergence. You see that low and that higher low, and you see the low and the lower low. And that doesn't show up anywhere else in the chart. It doesn't. Here you say, oh, is this a low? No, this is a higher low than this. This has to be lower than low, and this has to be higher than low. It has to be, and when you do find that, in this case, it wasn't even that one too. Here, maybe you might have actually argued yourself to but again, I don't like the little cheap ones. I want a stronger angle. I want a good angle on mine. And that's all you have to do. Here's a great angle one, and there's your divergence. Your stop goes underneath it. And I tell this to all my students and stuff. I said, you learn how to trade this way, and put in your stops, have the patience just to wait for the setups. Every setup will move in a direction, unless you have tremendous bad luck and you get hit with some news at the same time you're getting in, or the market is extremely in a sell-off and the bounces are not significant. And you should kind of understand that when you see it. If the market's selling off hard, you're not just going to randomly try to capture, you're not going to see that divergence. You want divergences in a nice choppy market. And you love divergences. Divergences works, this type of divergence trading works so well that, say this is a 75% success rate, this setup right here. Add another 10% if that happens inside of a channel. And you're on a channel line, you have a divergence. That is such a big thing. So, of course, and this is what we call a quad rotation when all 4 stochastics are oversold. So there's 3 setups that I look for. The divergence, the short side divergence, one we call the quad rotation, and there's another one which I'm not going to go into it, but it's called a 2020 flag. And that's also all based off of, I invented the 2020 flag. It's a bull bear flag. Hate to say invented it, but this is, I kind of just, you get a move up on the fast stochastics up to 80, and you have your 60 stochastics stuck under 20, and the price stays under 20. That's called our 2020 bear flag, and that's going to break down. And the same thing on the upside. And it's an 80% successful trade. It's a really good, whenever this 60-10 is so important. You see how this is embedded down here? And you see this bounce, and we closed back under it, then we dropped right off. Right when it hit that 80, we kind of dropped right off. That turned it to, so that's all we're waiting for. And I think, not being involved is more important, even overnight. I love the overnight trade now. I mean, I don't know, do you, people out there trade overnight? This just happened. This just happened before. It was a lower low, and a much higher low right there. You see, this is so important. I mean, it's like I'm showing you proof right here, what divergences do. And I said, show me a divergence, and I'll show you a market moving in the direction of the divergence 9 out of 10 times. But it has to be, a decent divergence. Now, this is a double bottom divergence, but it's a high-level divergence on the 9-3. It's really strong. Plus, you had a little volume candle, and then had a nice move. And again, this is not about, taking this, going away. You're trading. You're saying, all right, I got this, and then you get a rotation. You probably want to take it off at the VWAP, but yeah, it squeezed a little. You're not going to get the best entries. You're not going to get the best exit. You have the guts to get in on the divergence, you're going to get some meat off the bone. That's why I call them the $20 trades. And you do these 4 or 5 times a day, and next thing you know, trading the MES, you're up over $200. And that doesn't sound like a lot, but this is basic. This is actually, I teach this to people who try to qualify on prop accounts, and they have to qualify by making $1,500 on a 25K account. I said, take these setups. In 30 days, you'll qualify. You just want to do $200 to $300 a day on the MES. No risk, 5 contracts, easy trades. I mean, it could be done. That's, people try to these, and I am all for it. I enjoy, kind of teaching people how to, do these prop accounts. And when you see this, how can you not take anything but something like this?
How do you deal with trend days where the market's trending a lot? Because it seems like it works well in choppy markets, but what about when you see trends?
It works great in trends too, but it has to show up. It might not show up. And you don't go counter trend. Like I said, if the market's really trending hard, say it's trending down hard and you get a buy side divergence, I'd be very cautious on taking that and understanding that we're just chopping around. This is the best for little channels like this channel here. I'd be watching for a little divergence. No, it didn't really happen. If it came down a little bit more, it probably would have. It was very close. And then there was kind of a channel here. You could see it. It's just rudimentary. It doesn't have to be perfect. It's just, what the direction is. And if you get a divergence, you're looking for a breakout of the channel. 9 times out of 10, another rule, a divergence rule. Number 7, if you have a divergence inside a recognizable channel, and a recognizable channel is based off of 3 pivots area. So you need 3 pivots for a good channel. Moves up, move down. You could probably move this down right to about here. And I always always put a trend line basically where the average closes. I don't worry about the extensions, because the extensions are just algorithms and stuff that kind of maybe grab stuff, but they're not really good trend lines. But when you see a trend line, you'll know it. You'll see it like, oh, that's a channel line. That's a good one. And if you have a divergence on the lower part of a channel line, 9 times out of 10, the move is going to be outside the channel. That's your main pivot. Divergences make main pivots. So let's see. I mean, there was one here. It was there a divergence? No, that was a quad. There was a little divergence here. I was hoping that there was going to be a trade here today, like while we're on, because if we could hang out here, maybe we get a trade going here.
Do you think really the 1 minute chart is something that anyone can do, or do you think it's something that only a few people can do? Because 1 minute is pretty extreme, I feel.
I agree. 1 minute is extreme. Think of it this way, though. Think of it, first of all, when a new trader comes on, all right, instead of trading with their own money, they're trading with someone else's money. It's very easy these days, any way you want to do it. Then you teach them how to trade. Then they're not risking their own money. And it's not that you want them to learn on the 1 minute time frame, but it's like I had a coach and in baseball, and he'd throw ping pong balls at us when we'd had to hit it with the baseball bat. Ping pong balls. It was such a small thing that it was harder to hit, but when we got to throwing the big balls, it was easier to hit them. It was a great strategy. And same thing, if you could identify a good divergence on the 1 minute time frame and get a small little, this works better on the 5 minute time frame. So I'm trying to show you the 1 minute, because a lot of traders want that action, and you have to and it's much harder. Like you said, the 1 minute is very hard for beginner traders sometimes. They're too excited. You can't all be as calm as I am. So the 5 minutes. So when I switch over to the time frame, like I said, this right down here, this last line on the bottom is the 60-10. The 60-10 represents the 5 minute time frame during the day, the SPY. And when that is starting to move up, that means the 5 minutes. But sometimes we get divergences on this. And let me see if I could see one. You can't really see it. I would have to really zoom it out, and I think I could do that. You could see, if I zoom these out, you could start to see, sometimes you see little divergences. It's hard to say. It's just too far out. But you do see them on the SPY. I like to see them on the SPY. Can I bring up another chart for you? Because this is, when you say, can anybody do this? Yeah. It's actually better for beginners to learn the right way than the wrong way. There's such a steep, expensive learning curve in trading. and blowing up accounts and starting and it's exciting and it's like a casino and you could be caught up in the GameStop frenzies and it's very but everything's out to get you. The algorithms, especially this type of trading I do, is futures trading. I find investing very, very easy and very boring. Buy good stocks on pullbacks. This works great for pullbacks. This works great for divergences on stocks on a daily. Same exact thing. But that's, you get in it and then, I could show you any stock, show you a divergence in it, and you're going to see the big market reaction. Let me see there is a divergence right now in SWK. I know divergences. So here we have it's a double bottom divergence right here. So this is it's starting to move up a little. Again, this is the daily chart, so it's very hard to. But as you can see, we go back years, and you see all my trend lines here because we always look at these charts, and I'm always looking for But when they happen, and when a good technical level happens, it moves. It moves the stock in a big way. Here's a divergence here. There was a low, double bottom, higher low back here, and that was a pretty decent move. And then we had almost one here, but that wasn't really good. And we had one here. So I marked it off. It was a higher low, steep higher low, very good divergence right here, and a big power move up here. And again, the rule is to keep you out of the market as much. You want to put your money to work when the market's going to move in your direction, be it in a stock. Right? Unless you're investing, then you don't really care. But if you're trying to make money and survive, you want to put your money to work right when it should make you the most money, then to get out and then get into the next thing that you want to make money. And that's, you need a business plan for that. You need to practice that. And that means you have to take profits or you have to get out and get into it. And you could do this. Anybody could do this, but they have to be almost, in a military boot camp and learning how the proper way to trade and get in and instilled in them because it's easy. You're going into a casino. I'll tell you a fast story. I might have told this the last time you were on. I was on a year or two years ago. During the tech bubble, everyone was trading. It was like recently in the recent meme stocks, in the Reddit stocks and stuff like that. Everyone started trading. It was holding GameStop and stuff like that. It was kind of frenzy and meme-ish. They called it. I guess they called it. How most people blow up. It's very hard for beginners. So I ended up opening up a few trading accounts, Schwab One accounts for 3 or 4 of my friends, and we're all trading out of my apartment. It was like 96, 97. Everyone was in the market. I opened up accounts. I was doing real well. I quit my job in 96. I was working at the post office. And one of your videos says from postman to stock trader. It was a great video. It has a lot of hits. That's my story. So I started as a postman, but I trade all the time, and I had a pirate radio station. I drive around, I had it all rigged up and stuff. I would trade in the back of it. I'd run home, place a trade. But anyway, that was back in the 90s. And my friends started trading. I opened up accounts for them because I was doing good. I quit. I had $12,000 to my name, and it hit the tech bubble. Perfect. And by 2001, I think I peaked out about 600,000. About 2001. So over the 3-year period, I went from 12,000 to 600,000. I don't even remember. It didn't last long. 9/11 came around, the whole tech blew up and stuff, and I think I was able to hold on to a quarter of that. It was still pretty good, but boy, man, I learned a lesson there, and it was depressing because you never experienced anything like that. And it's very hard if you've not experienced, you don't know, you're a deer in headlights. So we've never experienced this before, like COVID. We never experienced something like it. We're going to die. It was crazy stuff once in a lifetime events to happen, a flash crash. We all go through those. So there are going to be times when we lose money, and that's not going to be your fault. Or anybody's fault. It's going to be just, you get caught, I guess. But anyway, I taught him, I said, we're only taking these trades. And back then we were just not even trading. I wasn't trading this type of trading at all. I was just follow me. I was telling them, don't do anything on your own. I knew what was going to happen. Ends up about a month down the road, they start not coming to my my apartment to trade, they start staying at home. And, within 2 weeks, they all came in here and they blew up their accounts. And they all wanted to just trade. They just so traded. They get in the market and you're just pushing buttons thinking you're going to be in the right way to go. I mean, I wanted to show you the 5-minute time frame real fast. Look at the SPY. Like I said, you could trade the options on this. But your answer is the 5-minute is a better vehicle to trade these on. Here, where I could point out 6 or 7 divergences during the day, when you talk about a 5-minute time frame, then you're dealing with maybe 1 or 2 setups a day. Now, let me show you something really cool. That's a Bitcoin chart right here, but I want to show you and I have a bot working on that, which looks pretty good. Let me see. All right, so you see this chart. This is my, see, we can put that on the 5. That is on the 5-minute right now. That's good. Easier chart to kind of read into. This is my NinjaTrader chart. Now, you see these blue lines? These blue lines are my whole methodology, taking it to the next level, I programmed it in so it would identify these divergences for me. So I wouldn't, that was my whole thing. I said, man, I only want to teach this style. I've, pretty much refined it to a point where I love everything about it. I don't want to miss these. A lot of times I get good divergences in the middle of the night. So I developed a program to kind of just wake me up next to my bed. It was kind of goofy at the time because I was just messing around with it. It would send an email to my phone, and my phone would set off an alarm and stuff. And I'd get up and I'd check to see what type of divergence it was. So anyway, I ended up programming that in, and then it became, now we offer it here at the station. Everyone uses it now. But this is a 5-minute divergence indicator, and it takes the trade too, and depending on the parameters. So you can see here, look at this actually, 14.3, pretty close to divergence. I can't with the blue line in the way here, but what you're seeing is that low and the kind of this low and this a higher low. That's a really good one too. And remember, 5-minute charts, each one of these candles are 5 minutes. So this move here basically is, 5, 10, 20, 30, 50, almost an hour of upside on this. And that's, and how much is that? That's 22 to 26. That's about 4 points. It's not that much. Maybe you get 2 points out of that. But that's an easy 2 points because it's a divergence. And you could get more. I'm just saying. Be realistic in your trading. Take the setups when they're there. Take the profits when they're there. What else what else you have to worry about?
Like that, definitely. Yeah, definitely see your passion there for sure.
Well, yeah. I mean, you could do this. Everyone could do this. You gotta be super disciplined, though. I'm not kidding. You got to be disciplined. I'm not fooling around when I say that. You got to be patient and disciplined. You have to be in front of. You have to put the time in too. I mean, how are you going to see these setups unless you're listening to me or something? But this is here. Look at this divergence right here. I was going to go back and just quiz you right now, Etienne. I'm going to, and look at this divergence right here. We just missed it. It would have probably made us $1,000. Yeah, that just kind of a low here and a higher low right here. It's just really nice. And look at that nice move. I mean, that's a nice move on that. And I have the script run on this too. So there is other divergence that are being seen. It takes the trades automatically, and it takes it off too, depending on your parameters. I apply this. I love this. I mean, this is a let's talk dreams. This is a dream maker. If you could trade and you wait for your setups and just have your setups, there, and you take them, you could change your life. You can't be involved in the markets as much as you want to be. You have to wait for the right setups, have the patience, take the slow road, because the market is planning on you to take that fast road, and that fast road, they're planning on you to blow up. That money needs to be, churned and burned, and people need to make money, and they're going to use people, that are not used to the markets. Now, we've proven mathematically, logically, that change in momentum, right? Change in momentum is a good thing, and if the momentum is changed already first, soon the stock will change. So the momentum has changed here. We started to see it, and then the stock started to move. All right, and that's why divergences, there could be divergences and other things, but stochastic divergences are a proactive indicator. That means that you see the indicator before the price moves. Most indicators, you see the result of the price moving. So that's another great, because you don't know what's happening underneath the hood here. But the stochastics are reading that it's taking each of these candles and it's comparing it to the previous candles for so many periods, and it's drawing this line. And that's what's telling us that we have the momentum shift. And it's a perfect science if you apply it right. And you apply different things to it, it gets even better. And there's nothing really better out there. And I stand by that. And I've been in this business for, it's 26 years now. And that's just me. That's my type of trading. I believe in other type of trading too. I like MACD divergences and stuff. George Lane was something else when he came up with that formula. I think he came up with a bunch of concrete mixers. There's a weird story behind that. It was a formula for mixing concrete.
Wow, interesting. I mean, we covered a lot here, and you want to tell people where I can connect with you and reach out if they want to see more about the stuff you do?
Sure, absolutely. I mean, yeah, we could stay on here all night, but I appreciate you having me on here. And if you guys want to hear more about stochastics or anything like that, I broadcast every day at daytradingradio.com. And you go over there, tell me you're from Etienne's, you get a free trial. Actually, can I just give out a link for a free trial?
Yeah, sure. We'll put it below the description. Yeah, definitely.
Yeah, it's dtr.tv/free. And that just gives you a free, you come inside, say hi, does no credit card or anything like that. And learn about the whole site and watch the show. Show's on every day, 8 o'clock to 4 o'clock. And, if you have any questions, you can reach me at DTRS at daytradingradio.com. Now, I just said I love being here. I love talking the markets with you.
Awesome. I appreciate you asking from my listeners. I'm sure they're going to be packed with value, a lot of stuff they can apply and learn from you. So I appreciate this. And hopefully you can catch up soon and discuss trading again. That'd be cool.
Anytime, Etienne.